What is up, everybody, and welcome to REIL Talks podcast. We're going to break down what it takes to live life on your terms through entrepreneurship, specifically real estate investing. So we're going to hit it hard, the good, the bad, and the real, because that climb, as any entrepreneur knows, is never smooth. My name is Mike Singletary. I'm your host. So let's get real. What is up, everybody? Welcome to another episode of REIL Talks. We have a great guest for you today. This guy I've known for several years, super impressive guy. So Tim Herriage is the president of Ternus, very respectable, like I said, individual within the real estate community. His career highlighted in, over $3 billion in transactions. I mean, that sounds like a crazy number, right? Tim's expertise spans residential, commercial. He's been lending to fellow investors for quite a while now. He's formerly a U.S. Marine Corps intelligence analyst. His discipline and strategic mindset has shaped his success. He's founded the 2020 REI Group, contributed to Blackstone's B2R financing, and championed Homevestors of America. Actually, I've met him through Homevestors. Now at Ternus, Tim pioneers an innovative financing solution, including a unique 100% financing fix and flip product in Dallas. And I know he's expanding that because Tim's the type of guy that he's going to do something. He's always going to do it really, really big. Beyond that, Tim's a family guy. So a man after my own heart. He likes to spend time in Rockwall, Texas with his wife, Jennifer, two sons, Alex and Will. And he's the host of REIL Investing podcast. So, this guy has a wealth of knowledge, and, I'm super excited to talk to him today. So Tim, how the hell are you, man?
Mike, what's going on, brother?
What's up, man? What's up? So you've been kind of busy, huh?
Just a little here, a little there.
A little here, a little there. So, I'm doing some research on you, man. And one thing that stood out that I thought was crazy, you've been a part of 17 startups?
Yeah. So this is number 17. Actually, when we formed the company in January, I put a post something like a dozen, and I wasn't sure. So I went back and counted. So this is my 17th entity.
That's nuts, man. I mean, that's awesome. And that's nuts. Help me out here, man. Tell me, which ones were the hardest ones? Which ones that stood out? And you're like, man, that just kind of rocked my world, because we're all about the hero's journey here, entrepreneur's hero's journey.
It's kind of funny, Mike. When we started Ternus in January, I started journaling the process. And if you really break it up, the first 10 years of my career was the small bootstrap operation. Hey, honey, how much in credit cards do we have? How can we get this started? Can we borrow money from our uncle? That type of stuff.
Yeah.
And then the next 10 years of my career was big business. Your starting balance sheet is $100 million type stuff. And we started Ternus with less than $5 million. And so there's been this lesson of small to big and then big to small. I'm not sure any of them were easy or easier or more difficult than the other, because I think they all bring different challenges. I mean, if you really go back to it, probably the Homevestors operation before the Great Recession was the hardest. In 2007, we flipped 143 houses, and it's kind of fun now. It's hard to even believe that's 17 years ago. But I'm 45 right now. Right. So I'm in my late 20s. I've got 10 employees. We're bringing in millions of dollars a month in revenue and spending millions of dollars a month in expenses. And we've got the wrap trucks and the advertising and the outside sales team and the construction management. And I'll never forget. So I think that was the hardest, because I'll never forget in June of 2007, I fired my accountant, the lady that did all my books, and I'm up at the office, at 8:00 at night, like none of us really should be, but that's what I was doing. Yeah. And I opened up this bank statement, and I remember it was like something like 1.3 or 1.4 million in cash that we received that month. And it was over 2 million in cash that we had spent. Because, construction, right? So if you're growing in the construction business, your cash flow position worsens every month. And I just remember I leaned back in my chair. I'm just going to do it. I just lean back and I'm looking at that bank statement. And I go, I am not qualified for this shit. It's just, I didn't go to college. I mean, I barely graduated high school. I come from a family of entrepreneurs, but nothing really big. So I'd been around kind of the self-employed really mindset. And, it was an eye-opening experience. And then what we went through in the next 12 months of having to downsize and, sell houses for a loss. And it seemed like every penny we made in '06 and '07, we had to give back one house at a time.
Right.
So, yeah, I mean, I guess that was the hardest because that was my first experience at being the guy, right?
Yeah.
There were no partners. It was just me and my wife. So, I mean, I'm the guy. If something needs to be done, I either have to do it or figure out how to get someone else to do it. So that was probably the hardest, was that Homevestors fix and flip business.
I mean, I think every single person that's been in this business that has scaled has gone through that moment, right? Especially if you're fix and flip, because you have this like, I don't know what it is about investors. They want to come in and fix and flip because they think that's the sexy thing. And then just like to your point, it is super cash intensive, man. And if you don't know what you're doing, shit, you'll go broke quick as hell, right? Because you're not only paying the
Well,
contractors, you're paying the hard money people, you're paying everybody except for yourself, right? So, man, that's an excellent point. So let me ask you this, man. Why Ternus? Why now? What are you seeing that you're creating the value? Because knowing you, like I said before, you're not going to do something unless it's going to be big.
So I have no doubt that Ternus will end up being the largest lender to real estate investors in the nation in the next 5 years.
Okay.
And it all started, I'll paint you a picture. We'll go 10 years back because it was kind of fun. 10 years ago, I kind of gift wrapped Main Street to Wall Street. That was really my job at Blackstone, was to help them understand what the Main Street investor needed. And it really changed the industry. It's made it where kind of hard money is no longer hard money. Now it's really feels like a mortgage when you get it. And last spring, I was driving to Park Cities, Utah. We were going to go skiing for spring break, and my son wanted to bring two of his friends. And so I said, all right, we'll drive. We'll take my truck because a big 4-wheel drive truck in the snow, you need it. I said, and my wife can fly because I don't want to be in the car with her for 2 days. And on the way, I said, listen, we're going to listen to books. Y'all aren't going to sit in the back and TikTok, right? We're going to, take breaks, but you're going to listen to books. And so I re-listened to Start With Why by Simon Sinek. And it had been several years since I'd read or listened to that book the first time. And the first time you listen to that book, it's all about, you kind of make it all about yourself. It's like, why do I do this? Why do I do that? What's my motivation, etc. But once you've done the things in business I've done, you have the ability to kind of listen to these type of things from how can I make my business better? It really became abundantly clear to me while listening to that book, the investor financing into business has gotten all the way away from what the customer wants, right? The individual real estate investor out there, like you kind of break it down to 3 things they want. Everyone gets into real estate to make money. Everybody gets in real estate for passive income or cash flow. And ultimately, everyone wants to build long-term wealth, right? They don't want to be told what to do. They don't want to be educated by some lender. That's just what they want. And so then I kind of said, okay, if that's what they want, how can I give them that but still be a responsible lender? So I kind of came up with 3 things that customers want. First and foremost, speed. In this business, a quick no from a lender is better than a slow yes. Because if you want to borrow, let's just say the 100% financing number you need or want is $100,000. But I tell you within an hour, I can't do that because I think your rehab's a little low, but I can do a 90 I can give you the $100,000 loan, but say you need to escrow $50,000 instead of $40,000. If you've got time as an entrepreneur, you can be like, okay, well, that extra $10,000 I was hoping to borrow, I can grab it from over here, or I got this deal closed. Like you can make a quick decision, right? So the first part was speed. The second is transparency. I really am striving at Ternus to be the most transparent lender possible in telling you how we make decisions, when we make decisions, and ultimately why we make decisions. Really just treat you like a partner in the transaction instead of the subject to an inquisition. So we're really focused on speed, we're really focused on transparency, and then ultimately the third leg of our stool right now is going to be community, because ultimately, as you and I know, Mike, it's a lonely business. I mean, so many days, we talked about this when you were on my show last year. So many days it's just you, and you don't talk to anyone else, or you may deal with the title company, or you may have to go meet a motivated seller that is having the worst day of their life, and it's just not fun. So as we look forward, part of the idea is customer rewards. Part of the idea is some shared ownership options. Part of the idea, frankly, is rebates. If you pay off your loan quickly, why not give you some of your money back? To be transparent, go back to number two. We're not there yet, right? We're still kind of lining out the systems. To date, we've only funded 4 loans. And the first one was 2 weeks ago. And we have 4 more scheduled next week. So it's kind of like we're in that not even ramp up phase, still in the startup phase. So I'm not entirely sure how we're going to provide community, but I know there will be things like customer rewards, rebates on loans when you pay them off, potential options where we can build an EXP type model where you can own part of the company. But that community, that shared ownership, that kind of we're building this together will come into vision in the next 12 to 18 months. And so I say all that because the name of the company, Ternus, is Latin for threefold. So when I break down kind of the 3 things that the customer wants, I have to focus on all 3. And when I focus on the 3 things that I want to provide, I have to focus on all 3. So it's kind of too many big businesses put what they want ahead of what the customer wants. So our whole thought process is design the products and services that help the customer meet their goals, that three-legged stool. They want to make money, they want cash flow, they want long-term wealth. And then build our company where it satisfies the 3 needs that customers really need from the product, right? I mean, try to make the conversation less about what's your rate and more about, do I like your product? I want to be Apple. I don't want to be BlackBerry, right? And unfortunately, a lot of lenders out there, they're the old BlackBerry still. They haven't kept up with the time.
Yeah, I mean, obviously everybody's always chasing after rates. And I've learned this lesson a long time ago. Like, rates are important, there's no doubt about it. But the ability to close is more important. You know what I mean? So much more important, because if you've done enough deals, you've had that problem, where for whatever reason, the hard money lender did not close in the time they said they were going to close, or they didn't do the things that they said they were going to do. And it sounds like you're really trying to make sure that is a non-issue for your clients, right?
Yeah, I mean, kind of right now, it's a mantra we have internally. It's we loan the way you buy. So even though I do have an account executive, someone that's your point of contact, we don't have processors and underwriters. We have loan analysts. I know with a lot of this, a lot of things that you do in your other companies, we've really set almost the processing and underwriting structure to mirror the way you would buy a house, right? You're going to send us the contract, pictures, and your rehab scope. We're going to run comps. We're going to look at your rehab. We're going to look at the pictures, and we're going to quote you a loan based off of what we know from our experience that property will take. So we don't pull your credit. I don't care about your credit.
Oh, wow. Okay.
No, think about it. I know people that are worth millions of dollars in this business that have a 650 credit score. They had that one utility bill that the county sent to the city sent to the wrong address, right? Like, I mean, I just see it all the time. We do pull your background, right? We want to make sure you're not a felon. We want to make sure you don't commit financial crimes or fraud. Because if you're just a good person that may not have perfect financial records, I don't care. You're still a good person. And if I make sure you're buying a good asset, let's roll. And that's just kind of
Yeah.
the way we're treating it.
That's awesome. So it sounds like it's obviously more asset based lending. And I know one of the biggest issues whenever I was dealing with hard money was just the underwriting. It was sometimes they wanted your first child. And I mean, it's like, Jesus, man, we're getting this obviously at a discount and stuff like that. So it sounds also like you're making that process super simple for them. Now, for people that don't understand this, when he says 100% financing, let's use $100,000 home as an ARV, although there's not a whole lot of homes out there that cost that much. He's really lending 100% to a loan to value, right? So what does that look like for Ternus?
It's the back to the old, what used to be the standard. It's 70%.
Yeah.
If you want 75, I say either buy it a little deeper or put more money down. So we're going to loan you 100% of the purchase and the rehab, up to 70% of what you think what we all agree the house will be worth. So I don't need an appraisal. I mean, Mike, I bought thousands of houses.
Yeah.
I mean,
You know how to comp houses.
I know how to comp, and I can teach someone to run comps.
Yeah.
And so it's kind of funny right now at the early stage of the company. My younger brother, who used to be my buyer, right, and my construction manager, he's doing the loan review for me. He's doing the draw inspections, and it makes it nice because he's not going to let me get hurt. And although this is not a loan to own venture, the fact that I've bought thousands of houses tells me if I make you a loan at 70 minus repairs and it goes bad for you, I will be okay in that house.
Yeah. Of
Right.
course, you got to be. I mean, you got to protect yourself.
Yeah, I can rehab my way out of that. Right.
Yeah.
And so it's kind of funny. We already have people, oh, well, so-and-so lender will do 1 point and 10.5% interest. I'm like, awesome. You should call them.
Yeah.
Literally, you want to go through that mess and pay $750 for an appraisal and take 4 weeks to close, knock yourself out. Right? We close within 24 hours of title being ready. It takes us right now about an hour and a half to fully underwrite your file, assuming you actually fill out the background check thing in advance. That takes about a day to get back. So if it's your first deal, probably 3 to 4 days is as fast as we can close. And I'm only running your background once a year. So every deal you bring me for the next 12 months, we're talking a 24-hour turn time.
Yeah.
So the crazy thing is, I think we're going to run out of money before we run out of.
You're going to run out of money, man.
Well, that's fine because I would rather have a waiting list and keep serving Mike's needs. Because if Mike's being good to me, I just need to be good to him, right? I don't need to keep growing my customer base. And you know me, I know how to go raise capital. We're starting out. We got like 50 million that we've. So that the money I said earlier, that was just the startup money. And that we've raised a little fund on the side to fund the loans. But we're not using what they call warehouse lines. So I don't have a bank that has any say whatsoever in my deals. And that's why, as we build this company, Mike, it's why we're only in Dallas, Fort Worth, because I can build the processes here because we know the real estate here so well. But Oklahoma City is probably my next market. I like the price point. I like the demographics of the working class neighborhoods. And I've got some active buddies up there that say they'll borrow 100 deals a year from me, right? And it's a non-judicial state. So if the deal does go bad, we have to go, we can fix it quickly.
Yeah. You don't have to deal with the mess, the judicial mess.
Yeah.
Let me ask you this, man. You're not going into the rest of Texas because I know you know Houston. I know you know San Antonio, right?
So right now we're doing transactional funding statewide. Right now, the fix and flip and what I call the wholesale loan, those are only available in DFW. I would imagine San Antonio will be next, like in the next month or so, because I own property down there too, so I know it super well. I would imagine Houston will be after that.
Austin's a little tougher.
Well, it's tougher mainly because the loan amounts are so high that I tie up more capital. And the properties aren't flipping as fast, right? So we only do 6-month loans because and I know if you are a good rehabber, 6 months is more than enough. I'm not doing loans over 500,000 right now because ultimately I believe in median home prices, right? If you're at or below the median inventory shortage we have, you can flip that thing successfully in 6 months.
Yeah.
Uh,
So Austin's probably not a good market for you then, because a lot of houses are above 500. You know what I mean?
well,
Mostly.
when I say Austin, I think I'd be more San Marcos or,
Yeah.
uh,
Yeah, I get you. The surrounding areas. Yeah.
but
So
that's actually though, just, and I'll tell your listeners this: every business has to have seasons, which means that I can't do loans for everybody right now, right? I have to pick a box that I'm very, 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 very comfortable in, and it will take, by this time next year, we won't have a $500,000 cap, right?
yeah.
By this time next year, we'll have some other bells and whistles. But right now, uh, we will go statewide. Kind of the idea is cities that have more than 20,000 people in them is kind of the thought, as I look at markets I've bought in, like Brownwood, Texas, or Wichita Falls, or Canyon Lake. I mean, some of these cities. So that's the idea. But no, we'll be nationwide. You know me.
Yeah.
Uh, we'll be nationwide with our balance sheet products in the 23 non-judicial states. I would imagine by January of next year.
Yeah. Yeah, I'm sure. And that's smart for you to ramp slowly like that, and especially in areas that you really, really know. And I want to talk to listeners that are, especially at the beginning, and that started out. And I have a story about this because when I started with this other guy who was more advanced than I was. He came from a financing background. He could not wrap his mind around paying 2 points, 12%, although I know yours is 1 point and stuff like that. But he couldn't wrap. And then what he did is he self-funded a lot of stuff. Well, he didn't last. Right? You got to leverage. I mean, and I know it's sometimes you're like, man, 12 points or 12% is a lot or whatever, but ultimately it's a cost of doing business to doing more business, right? Do you have any, I'm sure you got some input on that. And when you're talking to people that are always like trying to, and you mentioned it earlier, always trying to kind of walk you down the interest rates, their mindset isn't right. You know what I mean? What are your thoughts?
The third thing that goes in threes in our mindset mantra and kind of the way we look at this business is something you've probably heard me say: there's good, there's fast, and there's cheap.
Yeah.
And ultimately, you only get two,
Yeah.
right? And oftentimes cheap is not fast, specifically in the lending business. And as you know, Mike, some of the best deals are the ones you have to move fast on.
Yeah.
So as we look at this, I want to be good and fast. And I want to win you over with my transparency, my speed, and make you feel really special to me and my company. When you see me, you know the kind of parties Tim Herriage throws, right? Like, I want you to feel like you're part of the team, and I want you to feel valued, and I want you to know you can count on me. And I want that to be, I'm going to hold it up just like this iPhone right here. When I bought this a year or two ago, I have no idea what I paid for it, and I have no idea what it cost them. I didn't ask. I said, I want the new one with the 3 cameras and the 3D sensor and the biggest storage you have. I didn't want a blue one, Mike, but the blue one was the only one that they had that met my criteria. So I bought it, right? And so we want to be Apple, right? We want people to know that they can count on us, that we're going to have a superior product, and we're going to treat them with the courtesy and respect, frankly, that America's millionaire real estate investors, or soon to be, deserve.
That's awesome, man. Let's kind of talk about one thing that's always annoying when it comes to hard money lenders. At least some of
Only
them.
one?
Well, let's talk about the thing that annoys me the most, I guess, is the draw process. Right? The draw process is like sometimes it's tedious, and sometimes they take forever to get the money to you, or sometimes they won't give you the full amount for whatever reason they came up with. Right? And I understand they got to protect their assets. Sometimes I don't even want to draw. I'll just fund my own rehabs. I don't know if that's an option for you, but what is your take on that, and what does Ternus do about that process?
Yeah, I think the draw process in the industry has gotten really complex, and it doesn't have to be. So it's funny you asked this question. It's like you were spying on me. We actually processed our first repair draw inspection today. It was a loan we funded while I was in Tampa, like on February 8th, I think. So it took about 2 weeks. They're already halfway done with the project. And they called in and said, how do I get a draw? And I said, that's a great question. I actually already knew it. I said, here's a guy's number, and it's my brother for now. We've got 2 people that are same skill set as my brother Jamin that are coming on board in the next 2 weeks because we're at that growth phase. Said, here's his number. He has the budget already. Call him. He'll get out there in 24 hours, do a quick inspection. And I've already got the inspection back. I have to look at it real quick. And he'll have, his name's Mark. Mark will have his money tomorrow. We approved the entire draw he requested because it's line by line off your repair sheet. And this is where investors get in trouble. So if you do a crappy repair budget, you should expect a crappy draw process. If you do a detailed repair budget, right? If it says $10 to buy this cup of coffee and put it on the counter, if it's on the counter when the inspector gets there, you get the $10, right? But if it just says kitchen stuff, $5,000, right now you've got this process. So do you know the Roddy up at the Rehab Depot?
Yeah, of course I know Roddy. Yeah.
Yes. So
I'm going to have him on here sometime.
So we partnered with Roddy actually last week. He announced it on Monday. And when a customer sends in like a third-party GC bid, we're pretty good with that typically. But if it's a junky budget, I tell the customer two things. I say, number one, you really need to get a better budget. You can go to House Hacker. You can go to House Folios. You can go on Bigger Pockets and use their, here's all the free resources. Or you can pay me $100. I will send this to Roddy, and he will send it back in a administrable format to where you've got your line items, your scope items, and it's ready to go. We load it into our draw system, and you're ready. And it's been funny. We just started that on Monday, and so far, every single customer has said, yes, I'll take that, right? Because they're
$100. I mean, you know what I'm saying? First of all, because that's super interesting because a newbie investor, and I remember this because I've been in this industry eight years. So I remember not really understanding the construction portion of it, right? Now I can look at a house with pictures. I'm pretty much 5%, but at the beginning, you really don't know. So does this kind of help them along that process, or what does that look like?
I feel like it helps us ensure mutual success.
Right.
So those that don't know, Roddy up at the Rehab Depot has done tens of thousands of investor flips for hedge funds and small investors. And what I like about his budgets, Mike, is he kind of gives me a red flag if he thinks they're way under budget. And you know the deal. People go to some training and they learn that $30 a foot should get it done. That's just not true. But he'll come back and say, yes, if nothing goes wrong, Mr. Investor, I think you can do it for $20,000. But in our experience, looking at your pictures, you're going to need to budget. You should have a $4,000 contingency in here for HVAC. You should have a $4,000 contingency in here for electrical. Like one of the deals we funded 2 weeks ago was a fire damaged home. And the investor had a lot of experience, but he's just like me and you probably. A lot of it's back of the envelope math. It's like, 100 will get this done. Well, we were able to he was one of my test cases that made me do the deal with Roddy. Roddy came back a little higher, but it had all the contingency information in there. And I was able to tell the customer, I said, look, we can go down the rabbit hole and get an inspector out, one of our inspectors out there to do it. Or you can just close with this budget and you can draw all the money. Yeah, you got to put an extra $5 or $10,000 down at closing because, our caps total 70 LTV, but it saves time, right? So we do have the option if they want us to send an inspector out there in advance to do we kind of call it, copied Homevestors a little bit, second eyes, right? Yeah. Just to run some comps, go take a look at the house and tell them what we think. But it's been interesting. So many people are taking this because, they're entrepreneurs. We're all entrepreneurs. I still buy houses, just for the audience, just so you know, I'll buy 50 or 60 houses this year in DFW. I still buy houses. And my wife gets frustrated at me because I go out and say, we can do it for 40. And then it costs 50, right? For me, it's either over budget or way over budget. There's no such thing as on budget. But so actually about 6 months ago, we started using this service with Roddy because when we buy a house, to pull all of my knowledge out and put it onto paper that then she can give to the contractors and say, not here's a request for a bid. It's Mike, here's your scope of work.
Yeah.
And I believe it's saved us money, and it has definitely made my marriage better.
That's awesome. Well, that's a huge service, man, because so for you guys that, want to get into fixing and flipping, I don't recommend it at the beginning. I think you should probably wholesale a few first or something like that. Right. But that scope of work and getting that number dialed in, I mean, is so important. That's where you mess up the most, right? That and the ARV, because they're trying to stretch the ARV and diminish the scope of work, the repairs. That's typically what they do. And that's how you get your ass handed to you. So I mean, hey, that's awesome, Tim, that you're providing that service. Is there anything? How do you envision Ternus being in the future, man? Like, well, what is your vision of this moving forward 5 years from now? I know you kind of mentioned that we're going to be the largest. It's pretty lofty, right? So, I want to hear from you. Like, what do you see it being in 5 years?
5 years from now, I envision an annual shareholder conference where the customers own part of the business, kind of like EXP or a credit union. I envision a company that doesn't have to spend a penny on advertising because people love us, right? Like, I envision a company that you're a fool if you don't have us speak at your event because we're the most popular people there. And again, it's not because we're cheap. It's because we are good and we are fast and we respect you, right? So, I mean, and it doesn't even have to be the largest, Mike. I mean, there's hundreds of billions of dollars a year of this stuff. If I get, 5 to 10 billion of that, I'll be okay.
Yeah.
But I do think that if we do a good job and don't get greedy and treat the customer with the respect they deserve, we will be so loved by the community, right? Our people, that there's just no way. I intend to be on a waiting list for 5 years because I intend to have that much demand.
That's awesome, Tim. I'm sure you'll get there, brother. How do they find you, man?
Ternus.com. Funny story. Ternus is also a gentleman's last name. There's a family named Ternus. So the guy that owned it was his family URL, so I had to buy it from him. But it'd be like if you own Singletary.com and some guy emails you randomly through a domain broker. I need to buy it. No, Ternus.com. We right now in Dallas, Fort Worth, we're doing fix and flip financing. We're doing wholesale loans. So our fix and flip is 2% origination, 12% interest for a 6-month loan. But I've got a lot of friends that do wholesales where they only need the money for a couple weeks, right? They're going to just clean it out, put it on MLS, or do a mass showing. So if you do that loan with us, it's a 30-day loan for 1 point, and we will fund your entire purchase price. There's no rehab escrow. And that's hopefully, in my mind, that's a way to help people churn their capital and maybe even get out of wholesaling a little or assigning a little bit and get more into wholesaling because I always say this about assignments. When you're up against that close date, you become a motivated seller. And once you become a motivated seller, I think you give up a lot of profit. So, but both of those products will expand statewide, probably by the end of this quarter. We're doing transactional funding for 1 point. So if you've got maybe a big spread you don't want your buyer to see, or you're buying it from a bank and you need to close on the transaction, we've got a separate pool of capital just sitting there for that. So we can fund all that. We'll be taking that nationwide really quick. I think there's a great opportunity to help investors, specifically those that are in a state where maybe there's some legislation coming where you have to be licensed in order to wholesale.
Explain that just a little bit more for the newbies. What is transactional funding?
So transactional funding, just imagine I'm going to use letters A to B and then B to C. So in this example, A is the person that owns the property right now, and B is the listener or the buyer. So B goes and puts a contract on the house with A, and then goes and finds investor C to sell that contract to. So in an assignment, you don't have to close on the deal, right? You don't actually have to fund the A to B part. It basically becomes A to C, and then the money from C pays everybody involved. In certain transactions, you're required to close and fund the transaction. In certain states, you're required to fund the transaction. And then a lot of people just choose to make that part of their daily business because they're making 30 to 50 grand and they don't want to see, and they just don't like having that conversation with the assignee, the person that they're selling the contract to. They don't like to have that conversation. So they use transactional funding just so there's a purchase settlement transaction where B bought the house from A, and then there's a settlement statement where B sold the house to C.
Guys, it's so much cleaner doing it's pretty much a double close is what he's talking about, right?
Simultaneous close, double close.
Yeah, exactly. So whenever you have a nice spread, you don't want to take the chance of it blowing up on you in the last minute, and this will eliminate that possibility. Yeah, and so some other services that you were providing, man.
We've got some institutional partners from my previous life, so we can do 30-year fixed loans throughout the nation. We can offer non-balance sheet, other people's money, fix and flip in the areas that we're not currently servicing. Really trying to build it out full service. In a perfect world, though, man, like 90% of my business is my balance sheet stuff because that's what I have control over, right? If I'm relying on a bank to fund the deal, because all the 30-year rental loans have to be sold to a life insurance company basically right now. Mm-hmm. So those rules are set by the life insurance company, and I can't change them. But no, we can do everything that anyone can. But what jazzes me up, dude, is being able to create the right product for the customer where they can go do their business and we can do ours.
That's awesome, man. You can't go wrong with, going customer first, right? So I'll put all your links on the show notes, man. I appreciate you, brother. I look forward to seeing the growth of Ternus. I know it's going to blow up, and I know I'll see you around. So, hey, peace out, guys. Next week. So that's a wrap. Thank you, everybody, for tuning in, and I hope you received value from this episode. If so, please share this podcast to your brothers and sisters, and also hook up with us on Facebook, IG, and YouTube at REIL Talks. That's REIL Talks. Until next time, my friends, keep it cool, keep it real, and peace out.